Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES trended back up towards the top of yesterday's range, and at this point, heading into the open, the buy side is dominant. We are going to be using 55 half to 58 as the micro bull bear zone to establish our short-term directional bias. As long as ES is holding above that zone, the buyers can maintain short-term control, and holding above 55 half to 58 could lead to a move into the 69 to 71 initial resistance zone with the gap fill right above it at 73.75, and then really at this point the major resistance area and inflection point is 76 to 79, which marks the top of the current short-term balance area that we're trading in. So if we continue going up on high momentum, even a test of 76 to 79 is possible, and the understanding here is that the buy side is dominant. So we have these resistance zones along the way, but the pre-market resistance zone 61.75 to 63.75 may just end up being a pause point in the pre-market session, and then ES just continues going higher and testing 69 to 71. That's still an area where we can get some responsive selling on first test, but if you're going up on strong momentum, then you want to be careful fading that strong momentum, and probably better to wait for 73.75 or 76 to 79 before attempting a short. And if it's shaping up to be a trend up type day, then even then we will play defense off of 76.79 and look for more of a rotational type market there. But the way that the overnight session has played out, it's purely been a trending move to the upside. So in order for it to turn around, it has to hit an area strong enough where sellers can enter aggressively and really just halt the upside. And that might not happen until we go up to at least 69.71, but possibly even 76.79. And then if we continue bouncing up near the highs and everything is continuing to be bullish, the potential would be there for a upside break beyond 76.79, but by then the range is going to be quite exhausted. So I don't think that we're just going to slice right through 76.79, despite the overnight session being quite bullish. I think that the first test of 76.79 will still result in responsive sellers stepping in. But if you do end up going through that zone, then that's going to mark a 8-day balance breakout, right? Almost a 2-week balance breakout, and that can have some follow through into 87 to 89 half. That's not the very high odd scenario that's in play right now, but it's something that if we end up going up there, and we're doing so on broad market participation, the other markets are rallying, and AD has to look extremely good, tick has to look extremely good in order to get a break above 76.79. But the reason I mention it is that you should still be open to that possibility, right? It doesn't mean that that's necessarily the highest probability thing, but don't discount it thinking that once we get up to 76.79, that's it. Now we have to just return back around. We can, and most likely we will get some level of responsive selling at that zone. But as we go up there, make sure that you're taking that real-time price action into account, and just don't get blindsided by a move. If the market does have enough strength to go through 76.79, then just don't get blindsided by it. Be open to the possibility at least. It doesn't mean it's high probability, but it is possible. So, if you're open to it, then it means that you'll take everything into account before you make a decision at that zone. On the downside, 55 half to 58 is really going to help us set the directional bias and the tone on the day. So if we continue balancing above 55 half to 58, then short term that would tell us that buyers are in control, and we can go up to 69.71 and fill the gap. And again, 76.79 is really the major spot. If we break below 55 half to 58, in that case it would mark a failure at the key high volume node within that balance, and from there we can get a move down into 47.75 to 49.75, and the first pullback to that zone can still attract buyers given how strong the overnight session has been. And from that point on, it's just going to be step by step to see what type of reaction we get at initial support. Do we hold that zone, or is it just kind of a reactionary trade? And then it goes lower into 42 half, 43 half, prior close, and VPOC at 39 quarter, and then the bottom of balance 36.38. We are trading in a high volatility, high momentum environment. So if we stay within the balance at 76.79, and that zone ends up containing the upside, then we're still stuck in balance, right? We are in balance until we actually break out, and that means that you can get two-sided moves and opportunities in both directions. But if you're holding above the micro bull bear, then just understand that the buyers are dominant, and if there's a short setup that presents itself, you are going to have to be a bit more cautious. And if the market is not breaking that micro bull bear zone, then it's probably not the right trade to be in. Holding that zone can definitely result in some upside activity, but on the larger time frame, that we are still trading within a balance. And given the uncertainty still with the whole Greece situation, the 76.79 can still contain the range here, especially considering the overnight low is down near the prior VPOC, and by the time we get up to 76.79, the range is going to be quite exhausted. If we actually head up there, the range would be quite exhausted. So for now, we are in a very balanced environment, high volatility within the balance, and for that reason, we do have to be very flexible with our intraday bias. So if we do break 55.5 to 58, be willing to go short. If you are seeing a lot of signs off the open where, let's say, the market does start failing at 69.71, or it gets up there, but it does so and it's exhausted into that zone, at least short term, right? If it goes kind of in a straight line from, let's say, 61 up to 71, then it'll probably be exhausted by the time it gets there, and you can attempt it and then play defense. And if you're in from good location, most likely you will still get some price edge off that zone. And at that point, you want to see a fairly quick reaction at the zone. And if you don't get that and you just continue kind of churning and balancing at the zone, then it's not really that great of a trade, right? It shows you that there's no aggressive selling coming into the market, and then you should get out. So, you do need that flexibility, as we've seen over the last few days. We've had big moves in both directions, and locking yourself onto one side and missing the other side is not really the most profitable way to trade this market. So, most likely you will get trades still in both directions, but above the micro bull bear, just understand that, the real edge on the sell side might not show up until the market actually gets exhausted into either 69.71 or the 73.75 gap, and then finally the big picture resistance is 76 to 79. And on the downside, if we break 47.75 to 49.75 is the near-term target, and in the event of continued selling, we can go down and fill the gap and test the previous VPOC, and then the 36.38 zone marks the bottom of the current balance area. So we've seen some pretty decent moves off that zone, and buyers can still be active down there. So we may just end up kind of getting another balanced day, but so far the day has been very directional, and we know that buyers are short-term in control. So we just want to either see some clear-cut signs that the market is running out of steam and there's no momentum, for example, to the upside, or we want to wait for good location if we're going to enter short, and there may even be a nice long setup off the open here. But just understand that if you're going long up here at, let's say, 62, 63, you're getting in at a very aggressive price, and you need to see momentum for follow through. And if you don't see any upside momentum on the NYSE tick, and there's simply a lack of upside momentum, that could be enough to get the market back into 55.5 to 58. So the longs up here are going to have to be a little bit more cautious. Even though right now that side is pretty dominant, those things can change very quickly when you are trading within a balance. And then finally, within this high volatility environment, we're seeing that you really only need to get 2 or 3 really good trades. So, if the market is trading at a very aggressive price and there's no clear-cut setup, then just wait. There's enough volatility right now that you will get a good trade probably within the next 20-30 minutes, even if you skip a setup that is very unclear to you, right? So wait for clarity, wait for the right setup, wait for a zone or a setup that gives you high reward to risk, and avoid all the mediocre stuff in between, right? If that means missing a trade, that's okay. Just focus on the high quality stuff. So those are the main ideas heading into the open. Let's see if the buyers can maintain the control that we've seen in the overnight session. That'll help us set the bias on the day, and we'll take it from there.